Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will move to the order flow to see how institutions are moving their positioning. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that the market has just created a very strong impulse to the upside, followed by the start of this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have a market which is currently testing that zone which is in between the 0.32 and 50% of the Fibonacci taken on this monthly impulse, which is a quite strong level of monthly demand and support, which we could expect this market to potentially reject to the upside. Going down on the weekly time frame, what do we have? Now here on the weekly, we can see a very clear impulse to the upside, followed by a correction again. Also here, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse. And what we can see if we do that is that the market is currently testing also here the zone in between the 0.618 and 0.786 Fibonacci retracements. However, at the same time, as the market is testing this area, it is also testing previous weekly resistance, which is now turned support here, creating a confluence of support at this zone that we could expect this market to potentially reject to the upside. So the weekly time frame as well definitely looks quite bullish. Now, dropping down on the daily, what do we see? Well, from a daily perspective, first of all, I spoke about gold a few days ago. After the market had created this M pattern, I explained all the reasons for which we could expect a potential rejection to the upside and completion of the M pattern at the neckline, which is what the market has currently given us. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. However, at the moment, what we must notice is that we have a market which is currently bounded in between structure from a daily perspective. In fact, this market is currently bounded in between previous daily resistance, which is still acting as resistance here, and previous daily support, which is still acting as support here. Now, until the market will remain in between these two levels, we cannot be looking for any kind of setup on the specific pair because essentially we have a range-bound market. However, what we know is that the best probabilities in the market usually come when all the directional time frames are showing the same direction. And what we know is that monthly and weekly at the moment seem quite bullish. So what we would need in order for all time frames to be aligning to the same direction is a potential break above this high, because if the market breaks above this high, which is previous resistance, that previous resistance would become support here. So if we do get a successful break above this resistance on the retest of the previous resistance turn support, that is where we would have very good probabilities to see a potential rejection to the upside away from the area. However, at the same time, if the market will break lower, at that point, there is nothing to do and just to wait to see if the market actually manages to break below the weekly support. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for gold, what we can see is that with the last few reports, net positions have started decreasing. We went from 160k net positions down to 105k net positions. So we're starting to see a decreasing of the net positioning. However, if we look at the long term, net positions increased a lot. We went from 52k all the way up to 105k. So essentially we had a doubling of the net positions, with what we have here as the longs going from 207k to currently 210k. However, shorts got massively decreased from 155k all the way down to 100k. So more than essentially 50K shorts getting closed. So gold in the long term definitely getting stronger. So there is at least a possibility to see a potential break above this resistance. Now, if the market will successfully break on the retest of this previous resistance turn support, how we could be approaching a potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things and you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here you will have the possibility to gain access to my entire all-inclusive mentorship program. As soon as you open the page, you will see that I made a video here explaining exactly what you get in it. I really suggest that you go and check it out, which is essentially all the courses, so risk management, day trading, swing trading, position trading. Also, you have the possibility to access one-on-one private mentoring, the VIP market breakdown, so the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything you need as a trader all in one interface, and also the account funding program in which you get a complete scholarship in which essentially you get your challenge completely paid from us, so you don't have to pay anything for any prop firm that you prefer once you have graduated. And if you continue to scroll down, you will see that you will have the possibility to start an application to join the mentorship program directly from the website. So I really suggest at least to go and check it out. Also, with the link below here in the description of the video, you will see that you will have the possibility to join and open an account with the forex broker that I suggest, because very often I get asked which broker I suggest. Well, you find it directly in description. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.